Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Tuesday, August 16th. Stocks on Wall Street are giving back some of yesterday's big gains in early trading. But the market is up off earlier lows after Fitch Ratings reaffirmed its AAA rating for U.S. government debt and said the outlook for the economy is stable. Investors are also digesting reports showing weak economic growth in the Eurozone and its largest single economy, as well as some disappointing data on the U.S. housing market. Housing starts slipped by 1.5% last month, and June's rate was revised lower. In addition, building permits, which is a forward-looking statistic for the real estate market, fell 3.2%. Analysts say the data indicate the impact of foreclosed homes, underwater mortgages, tight lending standards, and high unemployment on demand for new homes.
We're also getting some reaction to reports on import and export prices and manufacturing. The Labor Department said that prices for imported goods rose unexpectedly in July. They were up 0.3%, mainly driven by a rise in the cost of crude oil. Over the past 3 months, import prices have declined slightly, a turnaround from the trend of the past year. Meanwhile, prices of U.S. exports fell 0.4% in July, their first decline in a year. However, we may be seeing a turnaround in the manufacturing sector. Industrial output surged 0.9% last month, their biggest gain this year. And the percentage of factories being used rose to its highest level since August of 2008.
Those mixed reports come on the heels of some very disappointing data from across the Atlantic. Germany's economy grew by just 0.1% in the second quarter, a sharp slowdown from its 1.3% expansion in the first quarter. Over the past 2 days, we've now gotten weak GDP reports from the Eurozone's two largest economies. France posted zero growth yesterday. Overall, second quarter GDP for the Eurozone rose just 0.2%, below expectations and well off the pace of the first 3 months of the year. Following the data, the euro is falling against the dollar, and U.S. Treasuries are rising in price as investors search for safety in the markets. That search for safety is also driving gold back up near record highs this morning. It's now trading above $1,780 an ounce. But oil prices are moving in the other direction. Crude is dropping about $2 to right around $86 a barrel.
On the corporate front, we're seeing some positive news from two of the world's largest retailers. Wal-Mart topped estimates with a 5.7% increase in second quarter net income, as gains overseas and at its Sam's Club warehouse chain helped offset weaker sales at its U.S. stores. Shares of Walmart are gaining 3% on the news. Meanwhile, Home Depot is 6% higher in early trading. Its earnings jumped 14% as the home improvement chain upgraded its customer service and tailored merchandise to meet consumers' needs. Home Depot also raised its outlook for the full year, a stark contrast to its smaller rival Lowe's, which lowered its forecast after reporting disappointing second quarter sales. Elsewhere in the retail sector, both Urban Outfitters and Dick's Sporting Goods are falling sharply after reporting weaker than expected quarterly numbers. After today's closing bell, we'll hear from technology heavyweight Dell. That's the latest from Weiss Research. Have a great trading day.